Another interest rate hike and a new message.
We've raised rates rapidly, and now it's time to pause and assess.
The central bank governor is holding rates at this level for now, forecasting inflation will fall to 3% by the middle of this year, getting back to the 2% target by 2024. Still, there's a trade-off.
We are going to see some pain in the labor market, some pain in the housing market and the economy as a whole.
Higher interest rates work by slowing spending. The central bank expects Canada's economy will grow just 1% this year.
That is an economy that is stalled. It's not going to feel good.
But when inflation is also being driven by steep global prices for food and fuel, some argue rate hikes are an outdated tool.
All of these things are creating inflationary pressures that make it extremely difficult to keep prices down at the 2% range. And I just don't think that the playbook of the 1990s is fit for purpose in the 2020s.
Canadian mortgage holders, though, have little choice but to try and ride out the highest interest rates in 15 years.
It's really getting messy out there, so people are concerned about how they're going to be able to afford their homes and if they're going to have to sell this year.
In February, I'll be paying a total of $5,077 every month.
Since buying a home with a variable rate mortgage in 2021, Mesbah Matab's payments have jumped $1,600.
A lot of things had to be cut, sacrifices made in our lifestyle, so it's basically like I've taken a big pay cut. That's what I feel like.
He had planned for higher rates, just not this much, this fast. And he says he's lost confidence in decision makers.
I would rather pay $10 a bread and have a house and a job than, be jobless and houseless and bread comes back to $2.
For now, he's taking it day by day. But if his finances get any worse, he'll be faced with some tough choices.
So the central bank governor said this is a pause, but just a conditional pause.
He says there won't be any more hikes if inflation comes down as forecast. But if labor costs rise more than expected or oil prices surge, anything that could make inflation rear its head again, he says the central bank will not hesitate to raise rates to get back to that 2% target.
Okay, but if everything goes according to plan, what's the conversation about lowering the interest rates?
Well, he repeatedly pushed back on that idea, saying that it's way too early to talk about interest rate cuts. Many economists don't expect to see lower rates until next year. So these are levels that Canadians are going to have to live with for some time.
All right, Nisha Patel, thank you.
You're welcome.